All right, good evening, everyone. Futures Brizio here. It's now 8:30 p.m. on Wednesday, December 11th. Hope everybody had a great day. And as always, before we get started, make sure you smash that like button, subscribe to the channel, and hit that bell notification so you get notified when I post new content. And as always, drop any questions, comments down below. All right, so we're going to get right into it here. And this is, I guess you could say, is like part three of the series I have here on trading with volume and price action. And I'm going to add another piece, two more pieces to this actually. Now, this is optional, but if you're looking for maybe a little bit more confirmation, I really had to hesitate and think about this because I don't like a lot of indicators and causes analysis paralysis. But I think these are pretty complementary and will give you a little bit of a mechanical system. Again, nothing's perfect. This is not always going to work, but no matter whether you use no indicators or 20 indicators or something in between or whatever, it's not always going to work, okay? And you'll miss some trades, you'll have losses, you'll get out of trades too soon, whatever. If you're following, especially, if you're following, well, any kind of system, again, whether it's price action or using indicators. So let's just jump right into this, and I'll go over what's on the screen, and then we'll just do a little back testing. So first of all, this white box right here, all this does is marks out, and the only reason why I have this on here is just for back testing purposes. So when I scroll back on my chart, I know what time I'm looking at on the chart. And this marks out 9:30 a.m. New York time on the left-hand side. And this marks out about 2 p.m., which is about the end of the really the far end of the trading day in terms of when the volatility in the market usually is gone. Usually it's gone before that. But so this is like basically, like I said, 9:30 New York time till about 2 o'clock. Okay. And so I only have this on there for the purpose of this video and for back testing, okay? But it's not an indicator that you need. But if you're going to back test, it is really nice so you don't have to keep, grabbing your crosshair and looking down at the bottom of the chart and trying to see where the time is. This will just save you that kind of time. You can put more time into back testing and less time into trying to figure out where the heck on the chart you are as you scroll backwards. Okay, so that's all this box represents. Then I added two additional indicators. So we have the volume indicator for the last two videos I made. That's this volume. Okay, and then I added a 100 period smooth moving average. Okay, now there's no magic to that length, but I found for this it's pretty good. So it's a 100 period smooth moving average. If you put a 200 period exponential on here, that would probably show you the exact same thing. A smooth moving average is essentially half the speed of a exponential moving average. So a 100 period smooth is about the same speed as. So I said that wrong. A smooth moving average is the same wow, this is really difficult. Let me just give an example. A 100 period smooth moving average is about the same speed as a 200 period exponential. Okay, so you can put either one. If I put, and I'll show you what I mean. If I put a 200 period EMA on here, and I got to make it a different color because they're going to overlap pretty close. Exponential, let's just pick a brighter color. It's yellow here. Okay, you can see it pretty much is 100% identical. You really can't even see the simple move, the smooth anymore. Okay, so whether you want to use a 100 period smooth or a 200 period EMA, completely up to you. Okay, so let's just get rid of that. I actually just deleted the smooth, but that's fine. Like I said, it shows the same thing. Okay, and then again we have our volume, and then down here is what they call a money flow index oscillator. And basically, this is another way of looking at volume. It looks at volume and it takes price into account too. So it's an oscillator. It basically can help smooth out the volume bars. As I said in the video this afternoon when I was talking about these volume patterns, that looking at one individual volume bar is probably not going to be good in a lot of cases, and you want to just kind of look at a trend. Where is the volume trending versus the price that it's representing? And I think this money flow index also helps do that as well. Kind of smooths out that volume indicator. And again, you don't need it, but it can help you with confirmation. It can also continue to show you divergences, and again, it can help confirm what you're seeing on the volume indicator, and along with using price action. Okay, so the setting for this, I think, is just the default setting. In MetaTrader, there's just this one. You can just it's just the period setting, and I left it at 10. You can adjust this if you want, but as always, if you make it too short, you're going to make the indicator very noisy. If you make it too long, it's going to be too slow, and it's going to miss entries and miss exits. So 10 is the default, and I would just leave it there. You can change it to real or tick. In futures, it doesn't really matter. It's going to make almost no difference on the chart. So I just left it on real, and of course, you can put whatever color you like. Okay. I don't have any levels. This is a dynamic indicator. Okay, so it's not a fixed indicator. It's a dynamic indicator. So it's not like some oscillators where it oscillates between 0 and 100, where you can stick a line in the middle. So you can add levels if you want, but I don't really see the need to. I'm not using this for overbought, oversold, and like I said, it's a dynamic indicator, so it's really hard to do that anyways. Okay. And again, we're using this basically on the 5 to 15 minute chart. I think most of the examples here I'm going to show you are on the 5 minute, but you could use it a little bit higher. I wouldn't go much higher than, say, like a 15 minute chart, but that's certainly a possibility if you'd like to slow things down a little bit. Okay, so that's it. So money flow index. And if you want to know how the MFI is calculated or more about it, just Google money flow index. You'll find all kinds of websites that'll tell you all about it. And you should do that. Just go to at least, Investopedia or something, and just, take 5 minutes and just familiarize yourself. It's not important to know what the formula is, but just so you understand what it's measuring. And it is a combination of price. Basically, it's using, price and volume to help draw this line out. There is another oscillator that's very similar that's going to show you almost the exact same thing. It's called the Chaikin oscillator, which is available in MetaTrader as a custom indicator, and I'm sure it's available on TradingView and all that included. But it's called the Chaikin oscillator. I'm not going to get into a big thing showing you the difference because I don't want to make the chart too crowded, but the Chaikin oscillator has two settings. It has a fast and a slow moving average setting, and so it's 3 and 10 is the default. And if you throw that on there just so you can see, it's not entirely different than the MFI, but I feel like in most cases the MFI is better. Although in my back testing, I have found one or two examples where maybe the Chaikin is better in terms of entry, but I think the MFI is a little bit more sensitive, and is generally better, but it's really a choice and of which one you use. So either the MFI or the Chaikin oscillator. It's just the MFI, if you're using MetaTrader, is an included indicator under volumes. If you go to MetaTrader and you go under the volumes tab, it's right here, money flow index, whereas the Chaikin is a custom indicator. So you'd have to, if your MetaTrader 5 platform doesn't already have it, you'll have to go out and find it. If you're using MT4, I can almost guarantee the Chaikin's not going to be in there. So you'd have to go out and download it as a custom indicator. So another reason maybe just to use the MFI in case, you don't have to go out and look for the Chaikin oscillator somewhere. But if you do, don't pay for it. There's definitely places you can go and find it. So I'm going to take the Chaikin off. We'll just go back to the MFI. Okay. And again, you don't need to do this, but basically here's the setup. You're basically looking to trade if price is trading above this 100 period, in this case, well, this is the 200 EMA, is trading above the 200 EMA coming into your trading session, then you're only going to be basically looking for long positions, at least to start the day. Okay. Now, there's going to be days where, price is going to be choppy and sideways. And those are days, you may find that your trading does not work out well. Moving averages do not perform well in sideways markets, as you probably know. So if you're coming into the trading day and you've noticed during the early hours of that trading day, especially like London European session, that your moving average was kind of cutting right through the price bars and almost horizontal, that may be a sign that you may want to be cautious trading that day. But as you can see on this day, coming in, the price was well above the moving average. The moving average definitely sloping up. So you can be pretty confident that you're going to see an uptrend. Now you can also go to your hourly chart, maybe the 30-minute chart, and look for the trend there. Again, especially if you notice choppy price action coming into your session, into the New York session. We don't have that in this case, but I think if I scroll back, we may find a couple like that. But in this case, it's pretty obvious we're in an uptrend, and so we're only looking for longs. And so basically coming into the session, we see, the second candle of the session, we get this bearish candle push down, okay? And we see, a pretty decent volume spike. But again, we're not looking for shorts here. We see the volume come in. This is basically your large traders trying to, again, just push the price down, basically sell to buy, grabbing a little bit of liquidity. See price comes down near the moving average. If we look down at our volume indicator, you see we have this big volume bar to start. Very common. That first bar is usually always going to be a big one because the market's just opening and there's a lot of orders sitting there. But it's not a huge bar. I mean, there's ones around here that are bigger, which is also another kind of telltale sign that, yes, there is some selling going on initially, but it's not like a giant bar. So, and on the money flow index, it's pointing down, and it's going down at that time when the market opens. Okay. Then on your next candle, you can see we have a new low put in, but less volume. So you see this next volume bar here is smaller. We have a new low put in. We have a smaller volume bar. And on the money flow index, we did put in a new low on the money flow index, but again, the volume is what you want to primarily look at, and you can see we put in a lower volume number here. Then price started going up. You can see our money flow index started trending up, and you can see the volume started trending. And again, this is what I mean, where the MFI just kind of mimics the volume. It kind of smooths out. So you see all the volume bars choppy in here, up, down, but the MFI is going up. It's giving you a little bit smoother pathway for this to go up. Okay. Then as price goes up here, okay, we put in this high right here after this first 5 or 6 bars. Okay. And we have the money flow index still going up. There's no divergence on that. We put in this candle right here, this little tiny doji, no candle. We do have decent volume still. Okay, it's stayed pretty steady. And then we have this big pullback. Okay, and price comes all the way back down to the moving average. Okay, and again, this is your big trader. So they came into the market with a little bit of selling. The buyers kicked in. Now this is your large institutions pushing price down to try to take out all the people that went long right here. So a lot of stop losses are probably sitting just below this candle. And look where they push. They push it down, they wick it out right here, and then they go higher. So, and I said this the other day when I was talking about trading on this time frame. You're trading on a very short time frame. You can give your trade a little bit of breathing room. So you can, be clever and think, oh, I'm going to get like a 1 point stop loss. But if this happens here, you get stopped out for no reason, only to have the trade go in your favor. And if you didn't happen to be in front of your charts at the time this happened, you miss out on this great trade because you wanted to have your stop loss sitting right against this low. So you got to give the trade a little bit of breathing room. The moving average might be a great dynamic support and resistance. So maybe you put your stop below this moving average, like right here, you would have been safe. If you want to find a nearby swing low, this is obviously quite a bit further away, but back here, this far probably isn't necessary. But maybe like below the moving average is a nice dynamic support. And in this case, that would have held. So let's assume that you did not get stopped out, but we did have this liquidity grab right here. Price comes back here. And you can see we do have the money flow index trending down, okay, on this pullback, which of course you would expect because it's, again, remember the MFI is tracking price and volume. In your volume bar, you do have this big spike up in volume, okay, and again, that's the big traders trying to push the price down. But remember, we're still trading above the moving average, so we're going to look at all this as pullbacks. All right, so we don't really care so much about that. You see the moving average held this area really nice, and then the trend started going back up again. And then if we look at our volume here, okay, we had a decent amount of volume. You can see the money flow index at this point starts tracking higher again, okay. You could even put a little trend line on the MFI here, all right. You got these couple little swing highs when price breaks through, then you go long. You know that would have gotten you in a little bit later, but let's see. Breaks out of there. It would have gotten you in at the close of this candle right here. So instead of maybe getting in right here, you got in a little bit later right here, but that's still a pretty good entry. You can see the market went pretty far. All right, so you're using basically, again, like I said, we've established that we're only looking for long positions here, okay, because we're definitely trading above the moving average in a bullish situation here. We had price bounce off the moving average here, pulled away from it, market opened, pulled back to it again and went, okay. So now if we're in this long, we get up to this high right here, and you can see we have lots and lots of volume up here at this high. And then the market begins to kind of move sideways a little bit, okay? And you can see the volume drop off. The money flow index moves down, okay? And then we have this situation. So we've got this pullback, right? Now, this is where the MFI can help you a little bit too, because as the volume starts to come back in right here, we have this bullish candle, and the volume is starting to come back, okay? Now we can't move that up here. So we've got this area where price starts to come back. You see the volume starting to build up again. And down here on the money flow index, what do we have? We've got a higher low put in right here, okay? This is not divergence because price over here did not put in a new low, but we've got a higher low put in. So we've got a higher low on the money flow index, and we've got trending volume. Okay, and then we see this bullish candle right here, and then there's your signal to get back in long, and then price continued up, and it went a little bit further outside of our ideal trading range. But if we just track this volume, we started to have divergence. So now we do get divergence. We go up, we make this high right here, and you can see this high right here, this little bump here on the MFI lines up with this high. So it's basically starting to diverge, right? Price went up, made a new high. Whoops, I don't want to do that. Price went up, made a new high. I can't grab this. All right, and then we started getting some divergence, right? Where the price was going higher, but the indicator was starting to make lower highs. So right here would be a signal. And then let's see, what is the volume doing at that point? Okay, the volume peaks out also right there as well. You got one more decent volume candle right after that, but it really was a bear candle, and it was actually a little bit lower. So this lines up really well. You see this divergence, you got this kind of blow off top right here, And then the price does drift a little bit higher, nothing great, but you can see we were definitely starting to head lower as we were kind of, losing all of our liquidity for the day. So this would have been a perfect place to get out, anywhere right in here. Yeah, you gave up a couple more points as the market just kind of drifted higher, but this still would have been a great trade. Okay, so again, it's still using volume and price action primarily, but the MFI can help you as kind of a confirmation. It can help you smooth out the volume bars by looking at the momentum of the MFI. It can show you things like swing highs and lows that you're not going to see on a volume indicator. You're not going to see because it's not a single line. These are individual bars, so you're not going to see this like swing high and low thing. You can get divergence on the volume bars, and you also can get divergence here on the MFI, and it'll be a little easier to see it on the MFI. Because if we look here, okay, so we have divergence right here on the volume bars, but it's just not as easy to see. If we kind of move this line over to here, make it about the same size, right? You can see there is divergence, okay, but it's a lot, to me, this is a lot cleaner than trying to look at all these individual little volume bars. But there is divergence on both of these, right? On these price bars going up, where price is making a new high, but you have sinking volume, and you've got this divergence also showing on the money flow index. So just a telltale sign that, hey, maybe you might want to either move your stop loss up, lock in some profits, whatever. Now, if you're a price structure trader, then you're like, okay, well, I'm going to hold this until price breaks structure. Well, the structure break came over here, like probably on this candle right here, which would have taken you back to this area right here anyways, where you got the divergence. That's where this price broke, kind of this last kind of major swing area right here. That would have taken you about here anyways, and you wouldn't have ended up any better. So again, at that point, you might as well just exit at the divergence of the indicator. Okay, so that was one trade, kind of a long one. Let me just scroll here, see if we can find something. So this is an interesting. So here's a day here where price was trading definitely below. And we did have a setup here going down. Didn't go very far. Then we had this big pullback, and you're like, well, can I trade the pullback? Well, you can. I mean, if you're going to trade strictly on mechanics, then no, you would not have traded this pullback because we're trading under the 200 EMA. But we did get another opportunity to go short up here, okay? But I wanted to try to find kind of a flat day. This is another great trade. Price, was trading just above the EMA at the open, but you can see, yes, it was trading above the EMA at the open, but this high in here, you can see these highs we weren't trending up. We didn't break these highs. If we had been above these highs, then I'd say we were in an uptrend. But the fact that it broke below the moving average right before, came back, and then didn't fail to make a new high, this is a downtrending market, and this would have been a great trade. And again, I'm skipping that for a minute. There's another good uptrend, another good downtrend. So this one, this one could be tricky. So this is on, let's see, this is November 29th. Well, we started, we had price going back and forth on either side during the overnight session. We have price diving below the moving average, then right before the open it went up, and then we peaked out, and then we went down. Maybe in this case, if we can go out to a higher time frame. So this is November 29th. Let's just jump out to the 1 hour time frame. And again, guys, it's not going to work every time, but where are we on November 29th? Okay, so that's right here. And you can see the price action on the moving average on this time frame is pretty choppy sideways. We did have it poke through, okay, but overall I would say we still were in a downtrend. So my bias on this Probably, especially with this doji candle heading in right into the initial session, I probably would have just been continuing to look for shorts here, okay? But this is where the higher time frame might be able to help you. All right, so again, I'm trying to find a kind of a sideways market here, where the pricing is kind of being split right down the middle from the moving average. Now, these are just sideways days, but they're underneath the moving average. Let me look at the NQ. Maybe we can get something on the NQ like that. But you guys get the point, right? So, here's a great sell trade coming into the session. Again, price is a little sideways, but essentially, we had come down and we were holding below this moving average the whole time. Then here's the market open. This is very common where you're going to see 1, 2, 3, whether it's one candle or several candles, push in the opposite direction. This is the liquidity sweep. Try to catch people going long, and then they dump. Okay. In this case, you did not get a pullback either. It just, once it peaked out, we got this doji candle, went straight down. Okay. So this is where you just need to take this trade, put your stop in a safe place away from here in case it does pull back, and then just let it go, and that would have worked out beautifully. There's just a sideways market. Now let me go to the hourly time frame and just see if I can see one on the hourly time frame. Yeah, maybe here on December 3rd. I don't know if I can scroll back that far, but whoops. Yeah, no, we should be able to. December 3rd. That's this one right here. Yeah, I mean, this is kind of a good one here. We got price moving on either side of the moving average. And you can see coming into the session, the moving average is really dead flat. And you can see price just kind of working in between. Now, eventually, later in the day, it did start trending up, but this is outside of our trading period. This actually goes into the overnight session. So, I mean, we're only talking about trading it during the New York session. But you can see coming in, we were below the moving average. Then we popped up through, lots of wicks, really no follow through. Then probably fooled you. Then it comes back down and think, okay, here we go. We're going to go lower now. We got 3 bearish candles down. You go short somewhere in here thinking that this thing was going to go down. It retraces. You're like, okay, fine, no problem. It starts going down again. And then, boom, it pops up, takes you out probably because, well, if you were short, you'd probably want to be out anyways because clearly this thing never really went down. And then came down again, bounced off the moving average. And then, like I said, we just kept just playing around in here, never really got going. So you're going to have days like this where the market is just not going to do anything. You're going to have relatively low volume. You'll have, an initial volume spike out of the gate, as we always do, and then you can see what happened to the volume the rest of the day. It really didn't do anything. It stayed in this range right in here and just was completely flat the whole day. And unfortunately, you're going to get days like this, guys, where you're going to get whipsawed, and you just either have to make a decision that you're going to take 1 or 2 trades on this pair, on this market, and if it doesn't work out, you're done, right? If you take a loss or a small profit or a break even, fine, and you're just done for the day with it. And that's going to happen sometimes. It doesn't matter what time frame you're on, guys. You're going to have days where the market's just flat and it just doesn't move. And this is kind of one of those days. Not a great example, but it's pretty good though. So, and if we go back to oil, we can, let me just take a quick scan back here. Yeah, I mean, here's a day here on, I don't think we can go back this far. This is October 16th, where we were like really flat. So I don't know. Well, maybe we can. Okay, so let's see here, October 16th. Yeah, I mean, here's a day. But we were under the moving average, so technically you could have traded this, but you can see it was a short trade and then it bounced and then that was it. It just didn't do anything the rest of the day. All right. So I don't want to like sit here and beat that. Again, guys, what you're looking for is price, showing definitively above and below, above or below the 200 period EMA or the 100 period smooth. And what you like to see is, especially during the overnight session, since the previous day's close. All right, this is all overnight. All of this price action is overnight. London session, European session, to see price, even if it's not big volume, just to see price, continue to move upwards and see this moving average continue to be sloping, in this case up. And then at that point, once the session opens, expect a move in the opposite direction, may even poke through the moving average. But as long as the structure holds, in this case we have structure back here, as long as that structure holds and we're holding above the moving average, we're looking for longs. And then at that point, you're using a combination of, market structure, look at the volume. When you see, big volume bars pop back into the market, that's telling you, especially in this case, if it's happening on a blue candle, that's telling you that there's volume coming in. Look at the money flow index, see if that's beginning to trend upwards as well, and smoothing out the volume bars and saying, hey, buyers are coming back in. And then once you're in the trade, you can manage it with a combination of market structure and using divergence to help you find good areas to potentially exit the market. Okay, and divergence is perfect for that. And in this case, like this is the one we went over, where that divergence would have got you out at a pretty nice area here. Okay, so we did have this swing high right here. Okay, there actually was no divergence, so that's an interesting note here. The money flow index on this high is not showing really any divergence. We did start to get the price moving sideways, and the money flow index sold off and the volume dropped here. But remember, there was no divergence when this high was put in. So another reason why to think that this is just a little pullback and price will go eventually turn higher, which it did. And then we started breaking higher on the money flow index after we trended down here, right? We had the swing high, another couple of swings here, price came down and then put in that higher low, which I showed you before. And then we saw this bull candle. You could have gotten in right here and certainly right on this one. Okay, so the money flow index is really good at picking out divergences, which you may or may not see on the volume bars, but the MFI will show them. So I just wanted to point that out, that if you're looking to get a couple more confirmation tools and make this a little bit more mechanical, you could add, like I said, a 200 period EMA to your chart, and you could add something like money flow index. You don't need either. You can just trade this just with the volume bars like I showed you earlier today and yesterday, or you could add one or the other if you wanted to add the MFI or the EMA, maybe not both. But if you want a kind of a complete mechanical system in terms of what direction you want to look to trade in, then the EMA will help you with that. And the money flow index is just a support for the volume indicator, again, to help smooth things out, help you easier identify divergences, and just to confirm what you're seeing in the volume bars, and helping you see things like, higher lows that you're not going to see in volume, like we saw over here, this higher low that was put in before the market started up again. Okay, just things you're just not going to see on a volume bar. So it just helps you confirm that. Okay, so anyways, guys, I'll leave it there. That's part 3. If I get any trades using all this tomorrow, I certainly will make a video on those, and we'll just review them. If you guys ever looking to have me trade live, feel free to let me know. I haven't gotten any requests to do so, so I really don't want to be necessarily distracted, being on a live video while I'm trying to trade, because of course you can be sitting there for a half an hour, and nothing will happen, and that's just a waste of everybody's time. So that's why I just kind of do these in hindsight, once it's already happened. And I think you can still learn and get a feel for the for what you're looking for. And you can always go back and back test on your own charts too. So, all right, so I'll leave it there, guys. Have a great night. Hopefully we'll talk to you tomorrow. Questions, comments, leave them down below. Smash the like button, and we'll talk to you soon.